interest rate arbitrage, right? We're arbitraging interest rates. Just, this is what banks do exactly to make their money. So banks do not sit there and make money by paying a piddly little amount of interest when you deposit money. So if you deposited $100,000 with a bank and they paid you 0.25% interest, right? That is a terrible return. And banks don't make money by paying you 0.25% interest. They make money when somebody takes a loan from them and they're earning a higher return than they're paying you in interest. And they're just making the spread. They're arbitraging that money. So
yeah. And they're also using fractional lending to I guess 10x that. But yeah,
they are doing that, Chris. But that's a whole nother conversation that most people like their head starts to blow off.
But yeah, they're paying you the 0.25% while they can go out and earn 4%, 3% on a car loan, or 6, 7, 8% on real estate or business loans, and a whole host of other types of loans. Okay.
So if they were paying 0.25% to you and charging 5.25%. I talk to people all the time and they say, oh yeah, the bank must be making 5% rate of return. No, that's not it. They're on $100,000, 0.25% to you is $250, and they're bringing in $5,250. Does that make sense, Chris? And that's without fractional reserve lending. That's a 2,000% rate of return the bank is actually getting. So this is the principle I teach people every day, is you've got to position your capital to where you can have liquidity or access to that capital when you need it, but you're not just letting it languish in a traditional bank account.
Yeah, I have a feeling you'll have some people reaching out to you about this. So essentially it's a way that you can be your own bank and fund your own deals, and you can set it up in a way where you can do that almost in perpetuity, where you're constantly compounding return as opposed to setting it in stone because you paid cash.
Totally. That's exactly it. I mean, one thing I was wanting to do on the show today is I was wanting to just define the difference between assets and liabilities. The way that I look at it is an asset is something that brings you money, and a liability is something that takes money away from you.
Yep.
And you just got to be careful to be investing in assets, right? And not in liabilities. That's one of the things that I think is a trap people get into, is they do all of this fancy tax maneuvering, right, to try to pay lower taxes, but they end up just buying liabilities.